And it is 9 a.m. on the West Coast, everybody. It's high noon in the financial capital of the world. We begin with the December employment report. Those numbers are in today. Fewer job gains than expected, but the unemployment rate falling to its lowest level in a year and a half. We have an all-star jobs panel coming up. And in the Northeast, a major storm. Will New York City be ready this time? Janice Dean's live in the Weather Center with the snowy forecast for you. Plus, more from the Consumer Electronics Show in Las Vegas. Liz Clayman is going to try and destroy what one company calls scratch-proof glass. I have all the faith in her on this one. Hello, everybody. Joining me for the entire hour today, I've got James Frischling, president of NewOak Capital, and FoxBusiness.com star reporter Dunstan Pryle is with me as well. And James Frischling, the market needs to see jobs added. I mean, not the Dow's down 46. We're not seeing some big positive bang today on this.
Well, I think, as Phil said and as the president said, there are some positive things to take away from the report. You have the $100,000 jobs being added. You have revisions to October and November, which I think a number of people had expected. I think the disappointment comes in part because the expectations had grown on back of ADP Employer Services announcing the single largest private sector additions in terms, I guess, since 2000. Except the numbers weren't there now, and I think the message is going to be a long haul.
What's extraordinary to me is the level of caution out there. You heard the comment of the morning, I think, is Ben Bernanke before Congress said it's going to take 4 to 5 years before we get back to some level of normalcy in the labor markets. I wanted to ask John.
Again, very expensive, and that is why you're seeing these bank stocks move lower. And, of course, this just brings to the forefront again this mortgage mess, because it's going to have repercussions all across the country as people fight the foreclosures against them. Right.
And real quick, Ashley, I want to bring in Jim really quick. Are you nervous about banking stocks? Or do you think this is a one-time blip for the day?
No, I am a little nervous about bank stocks. I also think this announcement is not good, really, for anybody except maybe the folks that are in houses right now and aren't paying their mortgages and therefore are going to have a stay of execution, to be nothing less than blunt. It's not good for the neighborhoods. It's not good for the system. There's a logjam in housing, and to move this thing forward, we've got to get people into the homes that can afford to be there, and we got to get the people who are in homes who can't afford to be there to move out to rentals. But this does create a larger logjam that, as Ashley was saying, is going to take a lot of time to sort out.
Okay, last word, Dunstan.
Just given the way that these loans were sliced and diced and passed across from one investor to the other. The only thing that's surprising about this ruling is that it didn't come a year ago, 2 years ago.
All right. Well, Ashley Webster, thank you very much for getting on that breaking news. Ashley's going to be on this story for us throughout the afternoon on Fox Business. Well, New York City, are we ready now for the snow this time? Mayor Mike Bloomberg and city workers got a lot of grief for their horrible response in cleaning up from last week's blizzard. The city investigating charges that union workers slowed down the cleanup to protest job cuts. All right, so now we've got less of an issue here. Dunstan, you're a local guy. I mean, you know, they're calling it his redemption.
My feeling is that Mayor Bloomberg probably has somebody with a shovel in front of every household in New York City this morning in order to prevent what happened last time. I will say this, though. Before that story broke last week, I have a friend of a friend of a friend in Staten Island who told my friend that there was, in fact, an intentional slowdown and that it was called on by the unions. What that does, it speaks to some of these larger issues that we talk about all the time here about the scaling back of spending at the municipal and county levels and so forth. This is a problem that's not going to go away, and here we saw a manifestation of it that was pretty nasty.
That's the thing. And there were talks of workers, you just shovel the same part of the sidewalk 5 times over, take your time. You're into OT like that, and you're booking a bigger paycheck. And again, they're protesting. It goes back to the union issue here in the city.
Well, there was a level of passivity to this storm that I was admittedly I was surprised about, and even on Sunday night, as it was coming down, it almost seemed the strategy was let it fall and then we'll deal with it after the fact. But there were no salt spreaders. There was no plowing going on, and it just let it accumulate. And even in Manhattan, we were buried. I know in the outer boroughs, were obviously had many more challenges.
Buried in trash right here. I mean, I kept walking down 77th Street, 76th Street, and the piles of garbage all week long. I didn't look today. Were taller than me and not gone.
It was sort of a head-scratching level of neglect.
Yeah.
And so when I first heard about that story of intentional neglect, at first I said, nah, but as the days passed, it seemed more and more plausible.
Well, American cities should all take note from what happened here in New York over the holidays, certainly.
Wall Street's had a tremendous recovery, and I'm not talking about the indices themselves. And we've talked on the show a little bit about the Main Street economy that's been lagging. Interest rates are low. Interest rates are predicted, I think, to remain so. Is that playing a big role, or is that a big factor in kind of your thought about adding your bullishness towards equities? And what happens if there's a change in rates all of a sudden? I guess monetary tightening is the strategy of Fed Chairman Bernanke.
Right. We think that short-term interest rates are going to be very low for quite some time. We're expecting the unemployment rate to gradually move down, but not to be below 9% at year end. Going to be very, very tough to drive short-term rates up with that kind of unemployment picture. Longer term, though, in the back half of this year, we expect the longer-term rate, the 10-year rate, to move modestly higher, possibly into the 3 3/4 to 4 1/4 range. And that could potentially affect the longer-term outlook for equities. But even at those rates, these are historically very, very low interest rates. Borrowing costs for large corporations are low. Banks are slowly putting dollars back to work on the lending side. It should be bullish for equities for quite some time.
Real quick, I want to show you the markets because we were down 97 session lows on the Dow. We're 20 points back now, 11,619. Watch financial stocks today. Watch Wells Fargo. Even Bank of America is down. All of the financial companies are down. U.S. Bancorp on this ruling out of Massachusetts. Keep an eye. 3 more hours of trading right now. I want to thank James Frischling and Dunstan Powell for coming in. It's always great to have you both on the show.
Good to be here.
All right. And I want to let you know.